You mentioned China before. I mean, China's been in the media a lot lately, and you know, what's going to happen with China in terms of, you know, their debt structure, and in terms of, you know, yesterday I read an article, you know, they were equating their situation to our banking, you know, crisis that we had in 08 and 09. What's your feeling on China? You know, they're having to compete now with India, which is great. As they went through their industrial revolutions, they're having a difficult time competing with India and some of the other countries out there, cost of manufacturing.
But China is going through a very difficult transition here. I'll say this up front, because the media, occasionally they get a bad number out of China, a bad manufacturing number, or a bad growth number, and the media says China's going to implode, they have big problems. They do have problems. They're an immense economy, and they're making a lot of transitions. China is not going to implode. And it's very seldom you'll hear an economist say something as definite as that, and it is not going to implode. And I say that for a number of reasons. One is that the Chinese learned in 2008, when their export markets dried up during the Great Recession, they don't have a social safety net in China. There's no such thing as unemployment insurance in China. So the Chinese workers, when they're laid off, their first recourse, not their last recourse, their first recourse is to riot. And the Chinese government knows that they have to keep social peace. So they're not going to allow an implosion. And to add some grist to that mill, the Chinese government has tremendous resources at its disposal to counteract a recession. Give you a feeling for that. The debt outstanding in the United States today, government debt outstanding, about equals to GDP. Actually, it's slightly larger than that. In China, the debt outstanding is about 20% of GDP. So the Chinese government has tremendous financial resources. They also hold tremendous amounts of foreign currencies, reserves, in their central bank that they could use to bolster their economy. So A, they don't want the social tension that would occur from a recession, and B, they have the resources to block one. But I'll go on a little more, because there's a tendency for Americans, when we hear about debt and financial problems, and particularly real estate problems, and China has had a real estate problem, that to draw an easy parallel to what we went through in 2007, 2008. That would be a mistake. China does not have the same real estate problems we had. The problem the United States had in 2007, 2008 was subprime. It wasn't just that we had lent to people who couldn't pay the money back. The problem was that no one knew where it was. It was filtered throughout the system. As a consequence, when people became afraid of subprime, they also said to themselves, and this happened over and over again, I won't trade with this financial institution because I don't know how much subprime they have on the books. I don't know if they can meet their obligations as a counterparty in this trade. So trading in this country, financial trading in this country, dried up. And that was the really biggest problem we had in 2007, 2008. People wouldn't trade with each other. China doesn't have a subprime problem. In China, by law, you have to put down 20% to buy your first home and 50% to buy your second home. The Chinese homeowner is not leveraged, or highly leveraged. The leverage lies with the local governments. Keep in mind, China is a communist country. You can't own land there. So the local governments own all the land. They were the ones that went into debt to develop these properties. And that's where the debt lies. Now, that's not a pretty picture, and it's going to take a long time to work out, but it's much more manageable than our situation was. In fact, the central government can step in and actually foot the bill for them. They're not going to do it, but they could, and that should calm things down a lot. Another factor that I think is very important is to realize that, unlike the United States, which has minimal population growth, when we overbuild real estate, it takes a while to work out. In China, at least according to the Chinese government website, you can go on it if you'd like. They have it written in English of a sort. You don't have to read Chinese. They suggest that 1 million people a month in that country walk off the farm into the cities looking for work. And that solves an overhang in real estate very quickly. In 2014, 60 Minutes did a show about how overbuilt China was, and they showed these empty buildings in these cities. The place where Leslie Stahl stood to do that interview is full now, because there are so many people coming into the cities. I'm not saying there aren't problems. The International Monetary Fund did a study and said it would take till 2018 for the Chinese to resolve their real estate problems, but it's not like ours. One other thing while I'm making the case on China, if you're going to have a panic, as we did, it happens at the beginning of the crisis. China has been adjusting to its real estate problems now for 24 months, give or take. 24 months of relatively orderly adjustment suggests to me that there won't be a panic now. Aren't you sorry you asked about China?
You know, it's a world economy and everybody hears and reads about China.